Ever wondered why money, a simple piece of paper or metal, holds so much power and influence over our lives? It's a curious thought, isn't it? But here's the thing. Money, as simple as it may seem, is a complex entity that plays a pivotal role in our lives, societies, and economies. Welcome to our journey into financial education. A journey that will unravel the mysteries of money, how it shapes our world, and how understanding it can lead to financial freedom and prosperity. Each chapter of this journey is designed to enhance your understanding and make the complex world of finance a little less intimidating. So buckle up, because knowledge is power, and financial knowledge is financial power. But what exactly is money? It's a question that may seem simple, yet it's more complex than you might think. At its most basic level, money is a tool that facilitates the exchange of goods and services. It's a medium that enables us to trade what we have for what we want. But for something to be considered money, it needs to meet 6 key properties. First, it must be durable. It can't degrade over time. Second, it needs to be portable, enabling us to carry it with us. Third, it should be divisible, allowing for transactions of varying sizes. Fourth, it must be uniform. Each unit must be identical to the next. Fifth, there must be a limited supply to maintain its value. And finally, it must be universally accepted within its economy. Understanding these properties helps us comprehend the true nature of money. Money has transformed in various forms over centuries. Initially, we had commodity money, tangible objects that had value in themselves as well as value in their use as money. Think gold, silver, salt, or even cattle. Then came representative money, where the value lay in the direct right to claim from the bearer a certain quantity of a commodity like gold or silver. These were essentially receipts for commodities held in vaults, and were as good as the real thing. Fast forward to the present day, and we're dealing with fiat money. This is currency that a government has declared to be legal tender, but it isn't backed by a physical commodity. Its value, purely based on the trust and faith of the people who use it. Money is not just a piece of paper or metal, it performs certain key functions. Firstly, money serves as a medium of exchange. It's an intermediary instrument used to avoid the complications of the barter system. When you're buying a cup of coffee or a car, money is the tool that facilitates that transaction. Secondly, money is a measure of value. It provides a standardized way of comparing the worth or value of goods and services. Imagine trying to compare the value of an apple to a book. It would be quite challenging, wouldn't it? Money simplifies this process. Lastly, money is a store of value. This means it retains its value over time, allowing you to save today and spend tomorrow. It's like a time capsule for purchasing power. Together, these functions make money an integral part of our lives, shaping our daily routines and long-term plans. The history of money is as fascinating as its role in our lives. Our journey begins with the ancient barter system, where goods were exchanged directly for other goods, without any standardized measure of value. But as societies grew and interactions became more complex, a more efficient system was needed. Enter the concept of money, where objects of inherent or agreed-upon value, like shells or beads, were used as a medium of exchange. This evolved into the use of precious metals, such as gold and silver, for their durability and ease of transportation. Fast forward a few centuries, and we find ourselves in the era of paper currency and coins, backed by the promise of governments. Then came the advent of digital transactions, making money more abstract than ever. Credit cards, online banking, and now the wave of cryptocurrencies are pushing the boundaries of what we understand as money. I hope you are enjoying this video. Please like and subscribe for more financial tips. Currency, the most common form of money we use today, has an interesting story behind it. It's a fascinating tale of transformation, from bartering with shells and stones to the crisp paper notes and shiny coins we're familiar with. But what exactly is currency? In essence, it's a system of money in general use in a particular country, regulated and controlled by the government. These authorities determine the supply of money, steering economic policy, and maintaining financial stability. It's the medium of exchange for goods and services, the lubricant that keeps the wheel of economy turning. It's hard to imagine a world without currency, right? But remember, it's not the paper or the metal that holds the value, but the trust we place in it. This trust allows us to trade, invest, and plan for the future. Fiat money, a concept that many find hard to understand, is actually quite simple. It's a type of currency that a government has declared to be legal tender. but it's not backed by a physical commodity like gold or silver. Instead, the value of fiat money is derived from the relationship between supply and demand and the stability of the issuing government, rather than the worth of a physical quantity of a substance. In essence, the value of fiat money is based on our trust and faith in the economy of the country that issued it. We trust that we can exchange this piece of paper or numbers on a screen for goods and services. It's this trust that infuses value into those colorful bills in your wallet or the digital figures in your bank account. In a world increasingly defined by intangible assets and transactions, fiat money is the cornerstone of our modern economy. Cryptocurrency, a digital or virtual form of money, has revolutionized the financial world. Imagine money that isn't controlled by any government, doesn't depend on the stability of a physical commodity, and can be sent anywhere in the world instantly. That's cryptocurrency in a nutshell. Cryptocurrencies like Bitcoin and Ethereum are powered by a technology called blockchain, a decentralized ledger that records every transaction made with a particular cryptocurrency. This means that cryptocurrencies are not just currencies, they're also systems for secure, peer-to-peer transactions. Cryptocurrencies have had a profound impact on global finance. They've introduced new ways to invest, opened up financial systems to people who previously had no access, and even challenged the very concept of what money can be. However, they also come with risks. Their value can fluctuate wildly, and they've been associated with illegal activities due to their anonymous nature. But like all forms of money, understanding them is key to using them wisely. Now that we understand different forms of money, let's discuss some important financial concepts, starting with inflation. Inflation, a term that often scares us, is an important aspect of financial education. So let's get down to it. Inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Essentially, it's your money shrinking in value over time. Consider a candy bar. Today it might cost $1, but with a 2% inflation rate, next year it could cost $1.02. That's inflation at work, slowly eating away at the value of your money. Inflation can be caused by numerous factors, including increased production costs or a rise in demand for goods and services. It's a natural part of a growing economy, but too high an inflation rate can lead to a decrease in the standard of living. Understanding inflation allows us to make smarter financial decisions, ensuring our money retains as much value as possible. Deflation, the opposite of inflation, is not necessarily a good thing. It's a decrease in the general price level of goods and services. When deflation occurs, the purchasing power of currency rises over time. Sounds good, right? Well, not exactly. Deflation can be detrimental to an economy. It may lead to a deflationary spiral, where a decrease in prices leads to lower production, which in turn leads to lower wages and demand, which leads to further decreases in prices. Think of it as a snowball rolling down a hill, gaining momentum and size as it goes. Moreover, deflation discourages spending and investment, as consumers and businesses may postpone purchases in anticipation of further price decreases. This can cause a slowdown in economic activity, leading to increased unemployment and even economic recession. So, while it may seem counterintuitive, a moderate level of inflation is generally considered healthier for an economy than deflation. Interest rates, the cost of borrowing money, play a vital role in our financial lives. Picture this: you're at a bank applying for a loan. The bank agrees to lend you the money, but not for free. They charge you for the privilege. That's what we call an interest rate. Now, why should you care? Well, if you're a borrower, lower interest rates mean you'll pay less over time. On the flip side, if you're a saver, higher interest rates mean more money in your pocket. But here's the catch. Interest rates aren't just arbitrary numbers. They're influenced by a number of factors such as inflation, economic growth, and central bank policies. For instance, central banks often lower rates to stimulate economic growth or raise them to curb inflation. So, in a nutshell, interest rates are more than just numbers. They're powerful economic tools that can steer economies and impact our daily lives. Now let's talk about a key player in the financial world, the banking industry. Banks, the custodians of our money, play an important role in the economy. They are more than just a safe house for our hard-earned cash. Banks are the engines that drive the economic machine, facilitating transactions and fostering growth. Imagine a world without banks. It would be a world without loans or credit, without a safe place to store your money, and without a means to transfer funds efficiently. Banks act as intermediaries, taking in deposits from those with surplus money and lending it out to those in need. This cycle of borrowing and lending stimulates economic growth by providing businesses with the capital they need to expand and innovate. Moreover, banks also contribute to the stability of the economy by managing risks and maintaining a healthy flow of cash. So, whether it's saving for a rainy day, investing in a new business venture, or making a simple purchase, banks play a pivotal role in our everyday lives. Financial education is not just about understanding money, it's about achieving financial freedom. We've journeyed through the intricate world of finance, shedding light on its many facets, from the basic definition of money, its various forms and functions, to an exploration of its rich history. But this is just the beginning. The world of finance is vast and ever-evolving, and there's always more to learn. So continue asking questions, seeking answers, and expanding your knowledge. Remember, the key to financial freedom is education and understanding. Stay curious, keep learning, and take control of your financial future. Please like and subscribe for more content like this.